General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.4.1 Disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. This week's almost done too. Meta stock jump, oil go up, Nasdaq will the fragile ceasefire holds. Basically, nothing changed from yesterday as far as gets the word of being the macro narrative. How would I describe this thing? It's not an expansion. It's not manipulation. We didn't manipulate nothing. Well, I guess it could be. Let's look at it like this. So PM pushed up, swept previous day's high. Let's say expansion because we ended the day up. Time of day matters. Sideline. Medium confidence. Let me get this because this is air. This with these blinds. Like it could rain or something. Medium. Yeah, I don't see none of this. Anchor point, we looking at it to be Tuesday. No, there's no expansion. I think we hit terminus yesterday. Nasdaq, here we go. CM15. Okay, looks nice. At the end of the day, sure. Mm, it's not New York reversal. Mm, you can form fit a New York OTE in here. No, you can't form fit it. It's 88. It's too deep. So it's not a classic profile. Excuse me, man. Oh, allergies. All right. Another classic profile. Hmm. Let me get the time right. 10:30. Started a drive to target previous day's high for a scalp. After let's go H1. That's interesting. We didn't get that low. Smaller on liquidity. Note this. Where are the buyers? If yesterday brought in the money, that's that from the daily. All right, so the high of this candle, we just made a suspension block, which is going to be interesting. Then we are playing inside of this wick, which is inside of this wick. So let me hit it with some of this. Yeah, body's respecting it. Yeah, ICT is not joking. Okay, but we do have us interesting order block here on the 15 minute. We delete that, which would have came from. Which will be this candle. I think that was the guess. Hold on. Yeah, it's a good guess. From the daily perspective, we have to. Well, we don't. And this really just set us up for. We don't need that much to pierce previous days high. There is no news really, so we can go into Friday. Kind of lame. Monday. This is Monday. Monday, Thursday. TGIF kind of puts us here. What is this coordinate? To what's that? 863.2. Gotta love CFDs. We'll take this out. We'll make this green. Then we'll lock this as well. Well, that's good. It's opening up TGIF because that usually doesn't show up for a Friday model, and it's a high probability Friday model. This weekly expansion. So I'm looking for 20% retracement from the intra-week high on Friday. Cool. All right. SPX. Let's look at it on the 15-minute. Okay, so we dug into it for SPX. If we respected 50% of that order block here. Clear previous day's high significantly. SPX is very strong. We cleared previous day's high. And but we slowed down and stayed below consequent encroachment of the order block. 30 bearish order block. Let's look at the H1. We didn't take that low. And we didn't retest that previous month's highs here. There is a weekly high up here. Which I can put here. Hold up. Trying to grab the top of this. Here we go. Which we might as well get. What news do we have tomorrow? I believe is it CPI? I believe so, yeah, because of Easter. CPI's on a Friday. Weekly high seems to be highest probability target. Same as buy stop level. No CPI tomorrow. Just to make sure it's not PMI or something. Forex factory. One was bad, yeah, CPI. Old weekly high seems to be the highest probability, and that's saying that's a buy stop level. No CPI released tomorrow. Let's go here. Let's get TGIF here, which we don't got Monday high. What is this? 67818. Okay. Right below daily open price. And also, this is SMT. Not really, because we took the high, but just how we closed. It's like behavior SMT. They didn't behave the same way. We can teach you how as well. 20% retracement to the end of the week. Let's look at the stocks. Let's look at SPY. SPY kept it simple. We just closed above the highs. Now let's look at QQQ. Barely closed above the highs. Even with all of us, just looking at the stock chart. Still a very uneventful day. Nah, don't engage with that. It's nonsense. Control C, I think I did something. No trade day. 80-0. Price didn't move till the very end of the AM session. My focus is AM session expansions. Not delayed deliveries. But overnight, and more dynamic openings with the price add patience. If next for the similar day, TGIF, so notes. Framework layout. Yeah. What are we learning? Wartime. Markets are driven. Different. What will I watch for tomorrow? TGIF. News. Okay. That's that on that. Y'all have a good day. Peace.